Hello everyone, welcome to TrueScale. Today I'm here to introduce you to one of the most accurate indicators that we have on our website, which actually created for the passive investors to be sure about their positioning and if a market is in a bubble or not. The name of this tool is Confidence and Bubble Indicator. To access it, head to our main web page. From financial data, select Confidence and Bubble Observatory. As you can see in this chart, you are seeing the price fluctuation for gold. The way that we calculate the confidence and bubble in an asset is purely based on price, and we do that using advanced mathematical equations. We have borrowed many mathematical equations from books, articles, and findings of mathematicians. We have combined them and created an algorithm that tries to solve the market. I know that seems like impossible, but apparently it's working. Either we were lucky or we did whatever needed and created a reliable algorithm. As you can see, we have 4 panels here. The first one is to measure the bubble and bubble maturity in a long term, which means that we are going to compare today's price to a price far away. It's not really up to us to determine which date we are going to pick. It's up to the algorithm. The second panel shows you the confidence and bubble in midterm. The third one shows you in short term. And finally, you get to see what happens in super short term. The higher the term you are looking in, the more reliable the signal is. The way this indicator works is that there are times an asset enters bubble, and there is maturity to that bubble. When an asset enters into bubble territory, it doesn't mean that it's gonna collapse or experience a reversal. The most probable move at that moment is that price goes up exponentially, and we know why that happens, either because of the options or because of the short squeeze or because people piling into the asset, but we know that happens. For example, as you can see here, gold started to get into bubble in February 2011, and from that point out gold rose from 1300 to about 18 or 1900. The bubble started to mature here. If you disable the chart for the bubble, you can see the maturity starts to happen here, right at the top. We had the same situation in 2020. At October 2020, the bubble in gold started to mature and then price collapsed. We call the negative bubble a restoring confidence. That's what happened in February 2014. And as you can see on the chart, the price level where the bubble started to form shows you a good long-term entry point. This is why passive investors and long-term investors had to have access to this indicator. It's going to save them from lots of headaches in the long term. You might want to enter market on a much shorter term. When that's the case, you need to use lower time frames. Like if it's 2017 and I had lost my chance to enter the market in 2015, I can go to lower time frame and start looking there to find the negative bubble, which is restoration of confidence. And I had the opportunity to re-enter the market at August 2018, which is actually a good price to enter the gold market. Let's select another asset and examine that. This is a chart for S&P 500. As you can see, on July 2021, we had a bubble that was going exponentially to mature, which was a sign of reversal. We could get out of S&P 500 month before it starts to collapse, like here. And we also had the chance to enter the market at 2008, 2011, 2015, 2016. The interesting point on this chart is that before the COVID happened, we started to enter a long-term bubble on August 2019, which matured on lower time frame and pushed the price lower. Here is the chart for BTC. As you can see, we entered bubble starting from 1800. The bubble matured, which was telling us that we should get out of market. At that time, if you had access to this indicator, you would know that it's going to collapse. And also you had the opportunity to re-enter the market December of 2022, when everybody was talking about lower prices on Bitcoin. Calculating the bubble and confidence for each asset takes lots of computational power, and it's really time consuming, and we have dedicated a whole server with bunch of CPUs to calculate and give us bubble and confidence. That's why we are slow to add new symbols to the chart. However, if you are an institution and you want faster calculation on a symbol or certain type of asset, as long as you are providing the server, we would be able to calculate that for you. This tool is also available for free for retail traders because it's a really reliable tool to know when to exit the market. That's it. Thank you. Take care and have a good day.